You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. Welcome back to the Option Block. Everyone's favorite. I know it's my favorite. I'm pretty sure it's yours, too, because you're tuning in. Bi-weekly source for all things options related. A little bit of options wit, a little bit of wisdom, a little bit of analysis, a lot of unusual activity, some what's trading, a bunch of your questions, maybe a dash of strategery. You throw it all together, you stir it up in the cauldron. You have the witch's brew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If Option Block isn't enough to fill your days, I should say twice a week now, fill your days, we got a bunch of other programs for you guys to mainline, including daily options news and volatility views every week, financial advisors option out there for financial advisors want to learn more about options, all sorts of fun stuff every month. Futures options, a couple of programs breaking into futures options now coming from the CME and our friends over there, Quick Strike. So you name the different segment of the option space. Maybe you want some basic education, a little bit more advanced education. We got all that lined up for you as well. The easiest place to find all of those great programs, the mothership, theoptionsinsider.com. While you're there, of course, click on some articles, some breaking news on the options market, all sorts of fun written stuff. I know you like to read, too. So a lot of great written stuff up there for you as well. And when you're ready for your radio journey, click on that Insider Radio Network tab, and you're off to the races with all nearly 10 years worth of programming now for you guys to really sink your teeth into. You can, of course, always get us via iTunes and TuneIn and iHeartRadio and Google Play and all the other fun stuff, and even via our own podcast network, podcast app, I should say, podcast network, podcast app available for the iOS and Android app stores. And, of course, if you are available every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, we also stream the program live via a little program called Mixlr, M-I-X-L-R. You can grab the link if you follow us on social media or on our website. And if you streamed before, same link every time. Or, of course, just follow us in Mixlr, and you can get the notifications right there as soon as we go live. Love to see you in there. Get some little great comments. You like to give the Rock Lobster a hard time, which is always welcome. Whatever you like to do over there, you are welcome to join us. And speaking of the Rock Lobster, he is joining us on the old program today. Uncle Mike called away on assignment, a.k.a. emergency dental surgery. Not exactly conducive to radio. Hopefully he heals up soon. He'll be back. Maybe even back by Thursday. We'll see if we can rope him back onto the program. But until then, we got the Rock Lobster beaming in from Parts Unknown, a.k.a. Maine. Mr. Rock Lobster, welcome back to the program, sir.
You know, that just goes to show you got to be careful playing football. It could wreck your dentistry for the rest of your life.
Yeah, he's had some issues, shall we say, with all of the I guess the post football dental career.
But he's a very good guy, so I hope he comes out with all his teeth still connected.
It's the unsung.
What else can you wish for?
It's the unsung part of the football career. We had Concussion and that epic movie dealing with concussions. There hasn't been a movie called Root Canal yet, so I'm looking forward to that, to seeing the dental travails of former professional football players. All right. And also joining us on the program today, it's Monday. That means we are joined by our friends over there at Options House. You guys want to learn more? You hear them talking on the show all the time. You want to kick the tires for yourself, head on over to optionshouse.com/insider. Pretty easy to do just that. You can kick the tires and all the cool stuff we're always talking about here, the scans, the research, the analysis, the tools, the platform, all that fun stuff. Kick the tires. Don't take our word for it. Kick the tires yourself and see if you like it. And join us from Options House today, Mr. Steve Clausen, old friend of the program, beaming back on. He is, of course, the chief investment strategist over there at Options House. Steve, welcome back to the program on this fine Monday, sir.
Thank you very much. I'm super excited to be here.
All right, and with the team assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Like the man said, this is the portion of the show where we break down what the heck was going on in the world of options and indeed in the broad market today. Like I mentioned at the top of the show, we are streaming this live on Monday, September 26th, for all of you playing along after the fact. Of course, we welcome you guys whenever you choose to download or stream if you can't join us immediately as well. An interesting day on the street, a lot of red on the old street today, coming off an interesting week last week where a lot of the major indices like NASDAQ were flirting with all-time highs. Today, giving some of that back, most of the major indices off nearly 1%. The Dow leading the charts to the downside off about 0.9 of a percentage point. The NASDAQ and the S&P off a little bit less, about 0.8 of a percentage point. And, of course, all that red on the screen means green on the vol screen, a.k.a. VIX Cash, popping up about 2.25 or so to end the day back up right around 14.5. So Mr. Rock Lobster, already all of our aggressive fades of volatility. Maybe Mr. Rhodes was finally on the right track. He's been buying vol for the last about 6 months on that show. Maybe he's finally on the right track. What do you think?
Well, if you're trading, you can't buy vol for 6 months and survive.
I forgot to mention, he has infinite bankroll from the CBOE.
However, yes, he is definitely right today. We had that huge sell-off in VIX Cash on Friday. You knew we were going to get at least a little weekend bounce. Market's down. And I think the reason is, again, my rule of threes. Today we had, I think, two things. One is I think the election's getting tighter in the debates, whether people want to make it, it doesn't matter, it does matter. I think it does matter. I think anything that creates a little uncertainty, I never view that as a positive for volatility and generally a negative for stocks. So that's number one strike. Number two strike, Merkel threw Deutsche Bank under the bus. As far as I think for a leader of a country that large, one of the top five, to say, and I understand maybe there's a tit for tat in Apple versus a Deutsche Bank. But still, the fact that you were kind of saying, well, we're not going to help it. I mean, are they going to have a liquidity crisis? It's kind of, you think governments are good for loaning money to banks at really high rates when they need it, like we did in, 2008. And the Treasury made a lot of money in TARP. So, of course, if you price something right, you should be able to make money when you do something. When you say, oh, we're not going to do anything, again, the market is so used to the pablum of QE and more QE and bond buying and blah, blah, blah that didn't like it. And I think that was part of it. And we were looking at, Louise, I just knocked everything over. But we were looking at Deutsche Bank today in chat room. Vol's pretty high in there. And in general, just some issues. The stock's trading at multi-year lows. It's almost like the financial crisis came and went, and Deutsche Bank never recovered. So I think those are two things contributing, to kind of not great market feeling. We'll talk about like Twitter and stuff aside, but with a little takeover buzz. But besides, I think Twitter and CMG, a lot of stuff was down on the day, but vol was up a little bit, and we'll see tomorrow, really, after the debate, if that was part of it. Maybe Merkel backs off on her comments, and then whatever we saw for vol today could very well disappear. So I'm kind of thinking that's how it goes, but, I'm just a guessing and a speculating.
There's a lot of action out there in the exchange beat today. Of course, you mentioned Miss Merkel throwing our friends over at Deutsche Börse, perhaps under the bus, literally, and perhaps figuratively as well. So we'll see how all that plays out. Of course, a lot of that weighing on the market. And of course, we'll get to the CBOE news, big news in our neck of the woods. Again, literally, right down the street. And figuratively, because they're so big in the option space as well. But before we get to that, Steve, I know you guys are watching a lot of things. I know you had an interesting blog over there at Options House as well today. I see you're a bit of a golf fan, lamenting the loss of Arnold Palmer, he of beverage and golf fame. So in addition, give us your, what caught your eye over there on the blog, as well as what's been catching your eye so far today over there on the old street.
Yeah, it was kind of ironically sad. Over the weekend, I was down visiting my sons at IU. It was Parents' Weekend down at Indiana University, and because I had to drive home Sunday, sitting there watching the early NFL games with my boys, I actually ordered an Arnold Palmer, and lo and behold, on my way home, my son texted me the news that my wife read to me because I was driving. Don't text and drive. That he had passed away, and it's really sad. He was quite an ambassador, and today's blog talks about people that think that Tiger Woods is an old guy or only knew Arnold Palmer from selling Pennzoil or something. Didn't really capture the essence of the man, but I mean, quite an ambassador for golf. Really brought golf to the masses. He was the consummate pitchman in that he only seemed to advertise for products that he actually knew and used and liked. And I think a similar discipline serves self-directed investors as well to sort of trade things that you know about, things that you think they offer a decent product. And it's not bad. It's not a bad discipline to follow as an investor, as well as if you have the ability to be a pitchman and earn hundreds of millions of dollars touting other people's products. But the real blog was about a little bit, about the Fed coming out, leaving rates unchanged, giving a boost to the market. The Nasdaq Composite touches an all-time high. We pull back Friday, and I anecdotally, I do believe the markets don't hit lows on Fridays. They typically, weakness at the end of the week carries into the following week. And that's just an anecdotal 30 years of watching the markets kind of observation. But, today I think it's interesting when you look at the sectors. Yeah, we had a ton of red. Two of the sectors that were hardest hit were the healthcare sector, which I think is going to be in the crosshairs of candidate Clinton's comments today, or tonight rather, and also consumer discretionary, which, larger ticket items, things that consumers don't have to buy, but choose to buy. I think a little bit of the uncertainty around the economy, the prospects for the economy, these two quality candidates that we have presented before us, I think are putting a little bit of nervousness in the marketplace. And then you mentioned it was only a 2.25% increase in the VIX today, but that is a 18% increase from the 12 level we were at up to 14.5 in the cash VIX. So I mean, I do think just a little bit of concern in the marketplace, and options and volatility of options and premiums of options is where people run to when concern gets elevated. I think it's a little bit warranted at this stage.
Well, it's interesting. A lot of things popping off. Speaking of popping off, it seemed like we were just dismissing on Friday's vol views, or I almost called you Arnold. I'm thinking too much about Arnold Palmer. You got Arnold Palmer on the brain now for me, Steve. Thanks for that. I should have one of his beverages here to salute the man on the show. But we were just kind of dismissing the quote-unquote Trump effect, and if it was lurking out there on the VIX, because it didn't seem like he was too much of a great threat. Then lo and behold, all these polls coming out recently and today and over the weekend showing that he's, depending on where you look, in a dead heat, or some may say even leading on some of these polls. And so all of a sudden it throws tonight's debate into an entirely new context. It also throws the potential for election volatility into stark relief compared to where it was even a week ago. And it doesn't seem like the markets have really priced that in yet. And of course, today's movement, if this holds, may perhaps be an indicator of things to come. But still, we were kind of dismissive of it on Friday's vol views, and perhaps we were aggressive with that because Trump coming up in the rearview mirror, and it doesn't seem like he's going away anytime soon, which is kind of interesting. Moving on to things that are kind of lighting it up in our space, I mentioned today. The big deal out there in the options world is, of course, the CBOE, Chicago Board Options Exchange. Our partners over there on the old Volatility Views program, right down the street here from the Options Insider Studios, agreeing to acquire BATS. So the BATS Exchange Group, known primarily for equities as well as a bunch of ETFs over there now, and also have some forays into options as well, doing that for $3.2 billion. Yes, billion with a B. So that just shows it's good to be in the volatility business. They have some spare cash lying around, and mostly in terms of their shares, which are fairly rich these days. So they have some currency for M&A out there. And I heard some rumblings about this last week, and I kind of instantly knew it was going to be true because, of course, the BATS people were in town last week. We had a great meeting with them on a variety of different topics. And, the instant anyone meets with us, that's pretty much a done deal that they're going to be acquired. And so when I heard the next day that there were rumors that BATS was on the block and CBOE was going to acquire them, I said, oh, that's going to go through because we are the sprinkling of magic pixie dust on all things M&A in the option space these days. But it is interesting. A lot of people are wondering why the heck they're doing this. CBOE kind of spending money. They already have a pretty dominant market share, particularly in some marquee products that they actually make money in, SPX and VIX. BATS' option share, not so much. It's decent, but it's not the kind of stuff you want to spend $3 billion for by any means. It's very low margin option share. I mean, it's the kind of stuff everyone's fighting over, the Apples, the Spies, the Googles, the stuff you have to pay a lot of rebates to get the flow to come to your exchange. So you're not really printing a lot of money on, whereas, SPX and VIX, you can only go one place. So CBOE gets to kind of name their price out there. And as we see, people trade a lot of SPX and VIX, so it's working pretty well for them. That's pretty interesting stuff. I know both of you guys have been around the space for quite some time. This is kind of interesting. We're always talking about exchange, profligation out there, about more exchanges coming into the mix. A little bit, perhaps, going the other way now, which is kind of interesting. A little bit of exchanges eating each other, to put it in a nice, colorful term. But that said, Steve, you've been around the space for a while. What are your thoughts here? And if any impact, if you think it might have on our listeners and indeed on your clients going forward, or is this kind of just a lot of M&A noise going around in the background right now?
No, I actually think this is relatively significant. BATS is sort of new school. CBOE is a little bit old school in that, think about where the CBOE really set its tone, right? I mean, they are the parent exchange for options, but that's back when the days, when I was down on the floor screaming and yelling my lungs out, trying to get trade tickets. They obviously have all electronic exchanges in addition to some open outcry exchanges, but their proprietary products actually are open outcry still. They still exist as open outcry. And their technology is a little bit old school as well. And BATS brings a lot of new technology to the table to really elevate the CBOE into the newest technology of matching engines. The other thing they bring is they're a global exchange operator. The CBOE won't just be a niche options player in the U.S. Yes, a dominant options player in the U.S., but they will, jumpstart any kind of global initiative that the CBOE might have. And, it's just obviously the competition has been great for the retail investor to have multiple exchanges, multiple venues to compete over their order flow, bringing down the costs. But there are definitely some synergies when it comes to scale. And if you can put two exchanges together and get perhaps find some efficiencies. Hopefully that translates to even lower costs for the end users, the retail investors, the people that use and trade on these different exchanges. I think that is, hopefully that will translate to something good, and the consolidation on the back end of on the expansion of exchanges can also be a good thing for market participants.
And the other big story out there in the realm that's fascinating a lot of retail and in the CNBC realm is, of course, the ongoing drama that is Twitter. one of our drama stocks we like to talk about here every now and then, and back and again in the races. There's been a lot of people floated out there as potential suitors. Of course, Google, which makes a heck of a lot of sense because just the utility of being able to index all that social data is huge. I think a lot of people in net would benefit from that. It's one of the problems with major search engines right now. They can't index all that stuff. It's locked to the Twitters and the Facebooks and others. the Facebooks and others out there. And so that's a challenge for people who want to get access to that data and search it and mine it. So that would be kind of interesting. Of course, Salesforce, a name that was bandied about, which is bit of an odd choice, and then it was dropped. This name was off a little bit earlier, as it seemed like some of that heat was kind of going away, and then lo and behold, more names get thrown about, as happens when these names are in play, including Disney, which is kind of interesting in one, and now Microsoft, also the latest to throw their hat into the ring. The latter also having an interesting axe to grind there, because they could also use that data to index it and probably make their Bing search a little bit more valuable and do a lot of other interesting things with it as well. And of course, all this talk driving Twitter options through the roof. The stock up 3.3%, but the options lighting it up. It's been averaging about 130,000 contracts a day. That's already inflated from recent drama. Today, doing 300,000 more than that. 438,000, nearly 500,000 contracts going up today in Twitter, which is just size paper. For good old Twitter, about 2-to-1 calls over puts, which is interesting stuff. Mr. Rock Lobster, was this one lighting it up? Well, first off, if you have any thoughts on the CBOE deal by any means, and then by all means, and then secondly, was this lighting it up in the old pit chat today? And what are your clients' thoughts there, your mentees' thoughts on all this this Twitter drama and its impact on all things options?
Well, I think one thing about Twitter, about BATS and first with CBOE is you kind of felt it's inevitable that the exchanges would start to get back together again.
That's true, but we've been saying that for how many years, and they just keep growing.
They just keep popping up. I guess we could say, well, we'll see the end of it. I mean, the only thing I thought, if you're an exchange, actually, come up with something with like a new product, like Nadix or something, where you actually invented something new. And my feeling is, I think the most important thing is, you remember when CBOE went public, we're like, oh yeah, they're just getting set up to get bought out. I'm not thinking that anymore. They're kind of acquiring stuff. They look like they want to be like one of the standalone companies, and they see a future in, this is kind of punny, but a future in options. And they're going to I think they're going to keep trying to cement sort of that place, and they might have to be able to do it with acquisition. I mean, the stock is worth a ton. What's it, doubled since the IPO? I remember all those guys, they got seats. Oh, we're going to get stock. And now they got the stock worth a lot of money. So I think I remember in 92, because I had a chance to buy a seat. I think they were like $335 at the time. And everybody was, oh, no, everything's going to heck in a handbasket. I think one of those seats is probably worth $7 or $8 million now. So that's not a bad return on investment.
And that's not even counting all the leases you would have collected over the years.
Oh, yeah,
that would have paid for itself. CBOE seats are one of the best investments in recent history. That's very unheralded.
Yes.
But yeah, that was a good deal.
So, I mean, the CBOE people have been around for a long time. The CEO was a trader. A lot of the people that work in the exchange now, either they're ex-traders or they've seen the business grow. They've been watching it grow for 30 years. And it looks like they're like, okay, well, maybe we are going to be the last guy standing and let everybody else duke it out. But we'll continue to innovate and do whatever. So, their acquisition of LiveVault, there's just like, they're doing things that make it look like they want to. Now they're selling their data. It's in different ways, kind of value add via. So, they're doing things that make it look like they want to kind of have a little piece in all of the option pies around. And it makes sense that they're going to trade equities at some point and kind of ramp up their whole Chicago exchange business. So it looks like they want to, like I said, it looks like they want to stick around. And again, the multiple is not cheap by any stretch of the imagination, but option growth, everybody poo-poos it, but it kind of keeps growing every 3 or 4 years. Like, oh wow, volume's doubled again. So it's hard for me not to like the deal, and it's still, I think it's easy to be you can be a CBOE bull because they're looking to stick around. They're looking to be a standalone. So usually, you want to own stuff like that.
Yeah, I had the same thought when they went public. I thought it's a matter of time until they're acquired by another large exchange group, and instead they're turning the tables and buying everybody else. So it'll be interesting to see how this plays out. Really quick before we dive into the odd block, Steve, I know probably Twitter has been lighting it up for you boys over there at Options House as well. What are you seeing? Are your clients really diving into Twitter, or are they kind of just watching all of this froth and not really diving in yet? What's been your take over there?
Yeah, normally Twitter is not a sort of a top 10 name in Options House, just because it's not as big of a name as Facebook, Apple, the typical retail names. But in the last couple of days, and today especially, lo and behold, it's in the top 10 as far as the most active options, the most active stock trades. So yes, retail traders like to go where the action is. They also like a stock that's green on an otherwise red day. Because they typically are, on the long side. And I think that this story is unfolding before them. They feel like they have perhaps as much information as anybody else. They probably see, hey, that might actually make sense if Disney pops in there and thinks that they could expand their brand or expand their content distribution network via Twitter and do some other interesting things. So I do think that it's a relatively exciting name for the retail investor.
Yeah, and this has been a running joke in our chat room, because this is my classic. It was my my Widowmaker. But the thing is, I always joke, I buy puts with stock if I buy what I would call a speculative stock, and I roll them down. So actually, it was like Twitter right around a little higher than this, probably. I think 28 was my put strike price, and I rolled my puts all the way down. My last put roll, I actually rolled down and even started to roll them back up again against the equities. But with being able to sell out all those puts, I took my break-even basis way down. So, it was obviously I was early, and now the position is looking good. But we joke about it and my biggest joke was when the thing went to 40 volatility, the options were a buy. And right now, all of a sudden, everybody hated it like it couldn't be worth anything, but the streaming thing is kind of picking up. It's like I'm likening it to when Facebook basically went from computer, everybody's desktop, to everybody's mobile phone. It seems like it was a quarter, right? After they launched, they were trying to get over to mobile, and then it started happening. Now all of a sudden, Twitter's doing the video streaming thing. Who knows where it's going to go? But it seems like there's a little bit of a game changer. Now, of course, it's in the rumor mill. First it was Google, now it was Microsoft. Rumors Microsoft, now Disney. Now because they're streaming Netflix. Who the heck knows, right? But all of these companies can easily trade stock for Twitter, although I don't know how earnings accretive it's going to be right away. But I think this is a fun name to trade. It's probably one of the few things where you could buy juice and do okay. Because I think it's kind of a simple thing. If it doesn't get bought out, it goes back to where it was, which is like $18, right? That's $5.50 ago. If it does get bought out, I don't know what the value is. So I think it, as a name, by its nature right now, it has sort of a more parabolic move profile. So that makes buying options a little more interesting, I would say, than it normally would. So full disclosure, I own a bunch of options in there, so calls and puts. There you go. And we'll see how it happens.
Your Widowmaker wasn't too Widowmaker-y. He wasn't bad.
It was kind of embarrassing because oh god, I got to roll puts again. I got to roll them again.
It's just more the constant reminder of rolling those puts down.
Okay, fine. I'm making like $2 or $3 a put, and overall, I think at the worst I was down probably 17% maybe, but the stock was down much more than that. It was more like 50. So, I mean, there you go. It's one of the things like. Rolling puts in something that you think you're going to hold it can work, but you got to roll them. Because if I didn't make one of the last rolls, I would have missed a ton of captured dollars. So anyway, that's the story to that. If Tusaw was here, he would probably strategize. He would strategize block that one.
I was going to say, it's like a little mini strategy block there for you listeners on a Monday. And now it's time to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the odd block. The portion of the show where we bravely, some may say foolishly, venture into the areas of the options market where angels fare to tread. Kicking things off, we were talking earlier about Germany and Merkel kicking Deutsche Bank down the curb there while we're seeing some playing today over there in EWG as a result, as of course the MSCI Germany Index Fund ETF closing today about $26 even, off about 1.6% or a little over 40 odd cents on the day. Pretty active day out there as well, as you might imagine. This name averages about nearly 4,000 contracts a day, doing a whopping nearly 51,000 today. 1,753 to 1 puts over calls. Yes, 50,838 puts and 29 calls. That should give you some inkling of where our attention was drawn out here, listeners. And if that is too challenging, too opaque for you, then just jump onto your screens and scroll on out to the 1 month that had any action. That was indeed OCK. It was the OCK 25 put spread going up, appropriately enough, 25,000 times, so, and some change. So about 50-odd thousand of those contracts coming in this one mega spread here, going up over there in two chunks on the Amex. Looks like, especially given the open interest of nearly 50,000 contracts on the 25 puts and only 10 on the 25 halves. Looks like we have a friend here who perhaps is fond of his broker, also rolling up a little bit here from the 25s up to the 25 halves. Again, doing that 25,000 times. So that is all of his open interest, and it looks like no one else is playing out here, so it looks like it probably is him. Then he probably has a little bit more to go to the tune of another 20-odd thousand, perhaps taking advantage of some interesting timing to roll up to a short put up to perhaps a bit more relevant of a strike. This index, as you might imagine, has been all over the place, particularly in the last few sessions, last few weeks, gapping down to low around 25 and back up to nearly 27. So it's kind of been vacillating around quite a bit, hovering right in the middle of that range, like I said now, right around 26. So an interesting time, Mr. Rock Lobster, to be taking your short put and moving it up ever closer to the fire, especially given the fact that just a few months ago, this thing was trading down in the 22 handle. And so these puts could easily come back into the money again. I don't know what's your take here on our friend getting a little bit closer to the fire here, perhaps in EWG. Interesting timing.
What we talked about last week. I said I was going to try to find a love your broker trade when I could.
This definitely has the hallmark. 50,000 contracts for a half a strike.
For a dime.
Steve, how much are you wishing this went up on Options House right now?
I'm wishing this guy could have saved a ton of money if he did it at Options House.
Yeah, we often refer
50-cent put spread for 10 cents. I mean, the only guy smiling is the broker, right?
You know what? You guys would have said, so, well, come over here. We'll save you some money. I don't know. I can't, honestly, you close the only thing I could say is this is open and they're making a dime. I mean, I could see it I can even remotely see it if the EWG was trading at the low end of the range. But it's not. I mean, this is what kind of brought up this trade just popped up so early today. And then when we were looking at Deutsche Bank, like, this is some funky volume. The only thing I can think of is they want to aggressively fade all the bad news around Deutsche Bank, because it's essentially trading. We were joking that Deutsche Bank is worth less than Twitter right now. You would think the bank with the biggest franchise in Germany probably would be worth more than $16 billion, but you would be wrong. It's not. And it's trading at, I would say, like close to fire sale prices. It's only a short stroke from here to be, a Lehman Brothers or something like that, even though nothing's really, nobody can point to something wrong. It's just there's so much negative press about it. It's having a hard time holding up. So, and I think this trade, the only thing I can think of is they're trying to fade it more aggressively by rolling closer for a dime to collect another dime. Okay. It's your money.
The one thing I would add is this is the Germany MSCI Germany ETF, right? And it's not Deutsche Bank. It's German industrial companies. It's German healthcare companies. It's German material companies. Some giants in the world economy, and perhaps the Deutsche Bank headline news gets people thinking about Germany a little bit more and thinking. But it's still just a dime, maybe he wants to
buy that.
Quite possibly, if he is assuming that he's the short interest in the 25 strike, he wants to spread it out between the 25.5 and the 25 strike evenly, and to just sprinkle his love of the German ETF between two strikes that are very close to the money rather than just one, to get away from some sort of pin risk problem later in the life of this contract. But again, I wish he did it at Options House.
Steve, you're such a charitable fellow, trying to intuit all the possible benevolent motivations behind this. We just refer to it as a love your broker, because this guy clearly is fond of his broker. He might want to make some discreet calls behind the scenes as we're talking here, Steve. See if he can route this guy over, because if he loves his broker that much, he's probably going to love you guys as well. These trades, all that for a dime. That's a lot of work, a lot of commissions, a lot of effort to get a little bit not as preferable of a risk profile, and B, don't only get a dime for that. It's one of those head scratches. That's why we call it the odd block, listeners. We don't just come up with that name willy nilly. We actually put a lot of thought into it, unlike our friend here in his trade, perhaps. All right, moving on to our next name/victim. This is Tech Resources Limited, ticker symbol TCK. If you're not familiar with this one, they are as the name implies, they're explorers and developers of 5 different segments of natural resources, including coal, copper, zinc, and other resources like that. Closing today, $18.49. One of the few green names on the street today, up about a third of a point or about nearly 2%. I said about $18.49. This name does a pretty decent volume, about 10,000 contracts a day, doing about 24,000 today, so nearly 2.5 times that. About 16.5 to 1 calls over puts. That'll bring your attention to laser focus of what caught our eye. This trade started out small when we first noticed it. Only 758 of the OC, expiring on the 14th, so the weeklies. 18.5, 21 call spreads going up. Looks like paper buy-in for 80 cents. Again, less than 1,000. As the day went on, a lot more paper sprinkling in to the tune of a total of 10,000 on dozens of blocks across pretty much all the exchanges. for a variety of prices on the later kind, with most of those leaning, again, buying right around that 80 cent or so mark. No open interest to speak of, really, on either strike, so this is all opening all the time here in good old tech. And our friends here are obviously playing on some more continued upside love here in good old TCK. It's interesting to watch this name, as you might expect for a lot of the resources names, was kind of in the doldrums back even as early as late as June, I should say. It was trading in the 9 handle, so pretty much doubling since early June. This thing has been on quite the tear to the upside, and our friends here are saying, you know what, kind of like that. I want to get in on some of that, and I'm going to go 18.5 and saying, which is now at the money given today's move, and saying there's a lot of room to run here on the upside. Obviously, got to go to 1930 for this spread to start looking nice here, and they're clearly not concerned about that, as they put 10,000 down, putting their money where their mouth is. Mr. Rock Lobster, what you take here on our friends loving themselves some upside, some near-term upside in tech?
You know, this was a kind of like Cliff's Natural Resources, stocks that have they got totally annihilated. Iron ore prices, zero, gas, and you're going to try to develop oil wells, annihilated. They were like the poster boy for getting spanked in pretty much every industry they had. And it was a $2.50 stock, and now it's an $18 stock. So it looks like they've kind of pulled themselves out of the abyss to somewhat on the earnings side. Starting to make a little money. And I think all of these are kind of I have to say, just kind of closet favorites because they were so annihilated, and maybe all of those businesses could come back at some point. So, I mean, and this is one that's a classic example of it. And I had a hard time. I was talking to some floor traders about this, or one floor trader that I talked to when he was looking at volume. We're just trying to figure out. What's funny is this all went up, like it went up on all the exchanges in small blocks, tons, size volume. So it almost feels like a newsletter where somebody's like, buy tech resources, it's cheap.
That was kind of the same thought I had, but then the size is just too crazy to be, a newsletter. Unless this was 20 lots.
I wish it was my newsletter. That's for sure.
Yeah. You can move some paper.
That would be moving some paper. So I think maybe just search for volume or search for liquidity. It's trading on every exchange. So, and it traded. It was kind of relentless. They just kept trading it until they got over 10,000 contracts. So somebody thinks that there is a future here in tech resources. That's the only thing I can guess. And we have profiled some buying in here and unusual activity. Most of it that we've posted, I believe, has been pretty right from the long side. So, for whatever reason, somebody knows what's up with this stock, and nobody liked it at 2, but they like it at 18. That never happens, right, Steve? Nobody ever hates stuff at 2 and then they like it at 18. It's like when Amazon was $11 or $18 in 2002, and now it's $700. So, hey, people's perceptions can change.
That is indeed
high
the
prices
case.
Begets higher prices, I guess, or like we've said in the past, no stock has ever gone to an all-time newer high without reaching an all-time high or a recent high. And yeah, this stock, like you said, off the mats from, where was it in January? $2.50.
Yes.
I do like that they limited their gain by selling that 21.5 strike call for 20 cents. That made it more palatable for people to sell this versus just selling naked calls on this stock probably. But by limiting their gain, they did reduce their premium by 20%. They sold those upside calls for 20 cents, bought the 18.5 calls for $1. They did bring their their probability of success a little bit closer to lowered that break even by 20 cents, which doesn't sound like a lot, but it's only an $18.5 stock.
Yeah, it is an interesting one to keep an eye on. This thing has certainly been off to the races, and at least according to this paper, unless they're heavily short and looking for a very near-term hedge, then this paper thinking this ride's going to continue. Interesting stuff. We'll put an asterisk on these guys. I think we'll be coming back in to check on our friends here as we move on into our final name, DVAX Technologies Corp. That sounds like a vacuum manufacturer. Nope. You'd be wrong. It is a clinical stage biopharmaceutical company. Ticker symbol DVAX. Closing today, DVAX. Closing today, $11 and some change here. Off about 3%. So not the best day here for good old DVAX. This is the name that does, about 2,500 contracts a day. Doing about 9,500, nearly 10,000 today. So nearly 4X. 20-to-1 calls over puts. And if you had to find this paper, listeners, you might be scrolling for a little bit out here today because it was all the way out. Wasn't ACK, wasn't Nov, wasn't Dees, wasn't Jan of 2017, wasn't even April. Nope, it was all the way out. If I can even get my screens down there to Jan. Here we go. Actually, Jan 2017. I was playing with you, listeners. It doesn't go out that far. All the way out to Jan 2017, and it was the 18 calls that caught our attention. In particular, 6,000 of them going up. Looks like paper coming in to gobble them up, and then sell some stock against it. But gobbling the calls up for a whopping $3. They went out 235 at $3, so lifting an offer there. Not an attractive print, perhaps, in retrospect. Doing it total on the day, actually, that's about the print, 6,136, excuse me. Again, going up on the Philly marked buy right. If you guys are confused by that buy right tag, means a lot of different things. Head on over to our website, search for what do these tags mean if you really want some clarification on what. We also did an episode, I believe, of Options Bootcamp about that exact topic as well. So we have a whole hour devoted to all things trade tags. If you're confused, buy right doesn't mean they're buying the call, selling the stock. Are they buying the stock, selling the call, vice versa? All sorts of fun nuances to be mined therein. Check out that episode. In this case, they were coming in, looks like buying the calls and then dumping themselves some stock, about 300,000 and some change at $11.11. Now, there is some size open interest on the strike to the tune of about nearly 23,000 contracts there. So our friends here, looks like they could be perhaps unwinding a bit of a shorter vol trade that went up here earlier. There was a print of a vol trade back in earlier, actually not that long ago, September 9th, just a few weeks ago. So not a long time horizon here in terms of letting it run, Mr. Rock Lobster. This name has been kind of been hitting the toilet pretty much ever since the last few weeks. This thing is trading about $16 now, all the way down, like I said, today closing right around 11 even. So an interesting trade. Interesting timing to put it on and indeed take it off. Mr. Rock Lobster, take us home here on our friends buy right in Jan in DVAX.
One thing I noticed about this trade was, you notice DVAX is trading 11, and the Jan 2017 18 strike calls are $3. Does that strike anybody as pricey?
That's juicy. That's a wee bit rich.
It's juicy.
I might want to buy some of those.
I had to go back and go, okay, there's some sizable open interest. And it looks like it. I thought at first, I'm like, it's probably closing, but they're closing for $3. So the original, I could not find the original print of stock, so I can't really tell if this was a winner or a loser or not. But I think they're buying the calls back for $3, selling stock today, kind of. But the thing was, I think when they originally did the buy right, the stock was higher, and they sold the calls for $2.75 when the stock was trading like $11.75. So I think they just gave up on it. They looked at initials like September 9th, like, okay, this might make a good buy. Again, I can't see the ratio of stock, so it's hard to know, but it looks like they lost on the stock and the options. I can't be 100% sure. I'm pretty sure they lost at least a quarter on the options. I'm not sure what they lost on the stock because they bought the stock, I believe, at a higher price at that time. So it's one of those things where I guess it's a buyout. It's some sort of drug healthcare company. They're probably leaning on a deal. they're leaning on an approval. But what's interesting is we've gone from the 9th to the 26th is 2 weeks, and the options are in the same place they were when they traded in the last time. And actually, I think with the stock down, the option prices are up and the vol's way up. So it's a good lesson. Again, another strategy session for Mr. Tusa on how volatility can move option prices. But I think they tried a buy right, and they're just doing a mulligan, meaning maybe the news is going to come out in the Jan cycle, and these options are never going to come down, and they're just blowing the thing out. That's what I think is happening, but we'll see if it's accretive to open interest or not. But it kind of feels like a duo, like a mulligan. They're just like, this is too freaky. I want to be out.
So instead of a buy right, it's a buy wrong?
It could be originally, I guess they bought wrong, and now they are trying to unwind out, I think.
Yeah, and this does like we're saying, this is a valuable lesson. If you overwrite a call option, you need to cover that short call before you can sell your stock, which is covering that option. And granted, this 6,000 contracts on a biotech name. This is not once again, it's not a retail investor, I wouldn't imagine, but you do need to cover those options before you can get rid of the stock that you had that was covering them. And the implied volatility is 177 here, so $3. Yeah, do your P&L graphs. $3 for a call option on an $11 stock. You have $3 of downside protection. But if he had bought the 19 calls, he probably would have paid about $3 for them, or the 20s, $3 for them. It's not something where implied volatility works. It's not something where normal distributions work. When you look at these biotechs that have an uncertain future, that have it's a binomial event. It's either perhaps worth $50 or it's worth $0. So it's not your typical option trade by any stretch of the imagination, which is why it's in the odd block, I imagine.
Indeed, and we got a little bit of time. A lot of good conversations here on the show today, but I want to make sure we get at least one listener question in. So without further ado, let's keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. This is the portion of the show where you guys get to take the reins with your questions, your comments, your insights. And today's, we only really got time for one, but it's an interesting one. It's a doozy. It comes from a keen-eyed and eared listener, Investor17, I believe, over there on StockTwits, I think. He asked us to say, can you guys please highlight if the P&G puts were bought or sold, and give perspective on what these high October put strike and the 120 strikes mean? And what he's referring to, listeners, is we actually put out multiple times throughout the day, you guys are probably familiar with these, our hot options reports on what's lighting it up on a given day. We do it midday, we do it end of day, because you guys love that stuff so much. And these put so many of these out. I didn't even notice this one until our listener brought it to our attention here. And he's referring to back on Friday, the 23rd, when someone was lighting it up for size out here in good old P&G. That is, of course, Procter & Gamble. The stock right now hovering about $87.85. And as our listener noted here, the 120 calls and 120 puts were the most active stocks and options at the options and strikes at the end of the day there on Friday, with about 241,000 and 191,000 respectively. So synthetic size going up on the 120 strike. If you scroll, that's for the October 7th expiry. If you scroll down the list a little bit, you actually see the October 14th 120 expiry also lighting it up to the tune of about 76,000 on each of those. And as our keen-eyed listener pointed out, those are pretty deep puts. Stock trading about $90, so those are $30-odd in the money. Not the kind of paper we often see. To make it even more interesting, I did a little digging after this question came in, and the open interest on these strikes is, I think, to use the technical term as Andrew would like, redonkulous. It was nearly 1.3 million contracts outstanding on the 120s on both sides of the strike, going out on October 7th, and on the 14th, the open interest is 829,000. And it's big paper going up again today, 210,000 in early Oc, And again, the OC 14 is about 30,000. Now, a lot of this kind of stuff raises a lot of the hackles of a lot of our listeners, and a lot of it isn't as perhaps as dubious or unseemly as it might seem. You see a lot of these kind of prints going up, maybe particularly when it's deep in the money calls, not puts in this case. Your first question probably should be, is there a div trade going on out there? There is no ex-div or anything going on right now out there in P&G. So then your next focus is then looking at some of these other trades that we talk about here. This maybe actually would be a good way to open the door for a future episode, talking about some of these types of trades. Boxes, this is not really a box because multiple months wouldn't really be a box, but it could be. And then also, some of the other synthetics we see going up on a regular basis, and some of the reasons why someone would want to do aggressive size synthetics here, but we are kind of running up against it. Crazy size. Mr. Rock Lobster, your ears are burning. So why don't you dive into this? I know you like to follow first. I know you like to follow a lot of this fun takeover ARB and these size synthetics going up here in P&G. Walk our listeners through them really quickly here.
I'll walk through it fast. There is P&G, I believe, is spinning out a fragrance part of their portfolio. It's a big spin out. It's going into a holding company. I think Coty is the buyer, and there is it's a special type of tender, and I cannot remember the name right now. Mark just wrote up a piece on it for our institutional clients, but it's a takeover ARB between a buyout ARB with a crazy tender, and it's priced a certain way that you're not quite sure how many people tender their shares are going to change the value of the overall deal price. So there's a lot of slippery pieces in it. It's not an actual retail trade, but that is what the paper is.
This is not retail. 200,000. This is not grandma in Iowa.
As crazy as it sounds,
you're blowing my mind, sir.
We created some kind of retail trades around it because after the ARB comes off and the deal is done, you expect some things to sort of move in different directions. But that's what this is. It's and it's going to go on. I believe we're starting to run out of time because there is a time you need of like a VWAP price to kind of settle where things are going to go as a marker, and we're getting close to that. You'll know when it's done when you stop seeing these ARBs when you stop seeing all these combinations go up. But
right, so
that's what it is.
It just gives the institution a way to be longer stock without having the risk of being long stock and being able to tender as long shares. Is that correct?
It is because they're trying to get an extra allocation of basically they're trying to get Coty below market, but they won't know how much they're going to get until after the tender is over to see what the allocation is, the pro rata distribution is. So yes, in a way that is right, but that's what they're looking for in this one. There you go. Just to confuse everything.
Great. I wish we had more time to dive into that. Unfortunately, we are up against it. We waxed poetic there in the odd block. A lot of great stuff to talk about here on the show today. But unfortunately, we'll have to leave it there. But that is such an interesting topic. It's the whole world of synthetics. Touched on it before, obviously. But what you can do with them, it opens up a lot of fascinating doors. I think maybe we'll cover those more extensively on a future show, not just the straight up combos, but also things like boxes and all the other fun stuff and the ways people have to do div plays these days in light of the new OCC rules against the old straight up div plays. When I first saw this going up on the Philly, that's when my antenna go up because there's still the place where all the div plays go up, but this is clearly not that. But still interesting stuff. We'll get into this a little more. Great insight there from our friend Investor17. Keep those questions and comments and insights coming. We love to hear from you guys. Maybe we'll get a little more into, obviously we will, a lot more of these, perhaps on Thursday's show. But unfortunately, the music's kicking in. That means we have to go. But before we go, we'll do a real quick combo. What are you watching for the week ahead, as well as what's coming up in your neck of the woods? We'll start with you, Steve. Obviously, a lot of stuff to parse. You put a lot of it up there on your blogs. Maybe also tell our listeners, if they're interested in reading what you're talking about, where they can go for your blog, and what's cooking in the land of all things Options House.
Yeah, thanks. You can see our blog. It has great educational content, a little bit of market commentary, and just other general general info on what traders are focused on. At optionshouse.com, we have a section for resources, and under that resource section, we have blogs and we have educational webinars. This week, we're kind of focused on Monday Night Football, but instead of watching a football game, we're going to watch the debate. Later this week, I'm focused on this oil meeting in Algiers between OPEC nations, and Russia's included, and Iran is a big player. They're sort of the wild card. If we can get some production cuts, we'll see oil probably rally, and we probably will see oil companies rally along with that.
Interesting stuff. If you like what Steve's always talking about here and his cohorts here on the old program, you can head on over to his blog. And, of course, if you want to kick the actual tires for yourself, try out the platform, try out all the trading tools and everything else there, head on over to optionshouse.com/insider. And you can do all that, all the fun stuff we're always talking about here on the show. Maybe you, too, love your broker. You want to express that to Steve. That is the place you want to go. You want to do a couple 100,000 lot rolls here or there. I'm sure Steve would welcome you to use that link. And before we go, Mr. Rock Lobster, same question for you. What are you keeping an eye on for the rest of this week, and what is cooking in the land of the pit?
I'm kind of going to do what Steve said. This is OPEC thing going to be for real? Is this election thing going to be for real? I want to see if there's any more spill out from the Deutsche Bank stuff. And I think we find ourselves in kind of the same place where, okay, the Fed's done their thing. There's really no other reason to get bullish except for just the Feds are going to stop screwing stuff up. So, what takes us higher? Maybe higher oil prices. That could be something like that. To get things kind of moving along is all I can think of. So that's what I'm looking at to see it and see if this this 14.5 VIX holds up for more than 2 days. That would actually amaze me just a little bit.
Speaking of moving things along, we got to move this show along. Optionpit.com to learn more and register for all those great webinars and all the other fun stuff they have going on over there. And again, check out optionhouse.com/insider to learn what Steve and the gang are always up to in between their visits here on the old Option Blog program. And on behalf of Steve and the Rock Lobster and Uncle Mike, who could not be here, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for joining us live. We love you guys as well. And we'll see you next time for more The Option Blog.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.